ICICI Prudential Nifty200 Value 30 Index Fund. Will investing in this NFO help you in your long-term wealth creation process or not? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. But before analyzing this NFO, let us first understand a few basic details about this. So the NFO, it opens on 30th September 2024 and closes on 14th October 2024. And some of the key features of this fund are: it is an open-ended fund type which belongs to the category of equity, which is value oriented, and it has Nifty 200 value 30 TRI as its benchmark index. There is no entry load as well as an exit load in this fund, and the minimum investment amount you need to start investing in this fund is just 100 rupees. And the fund managers for this fund are Mr. Nishit Patel and Ms. Priya Sridhar. And according to the riskometer, there is very high risk involved in this NFO. Now, if you take a look at the primary investment objective of this fund, that is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index, but it can be subjected to tracking error as this is an index fund. Now let us take a look at the underlying index represented in this fund, which is the Nifty 200 value 30 index. So some of the key details about this index is that Nifty 200 value 30 index aims to track the performance of 30 companies from its parent Nifty 200 index, which is selected based on their value score. So the value score of each company is determined based on earning to price ratio, book value to price ratio, and sales to price ratio, as well as the dividend yield. So the stock weight is based on the combination of the stock's value score and also its free float market capitalization. So this index can be used for a variety of purposes such as benchmarking fund portfolios, launching of index funds, ETFs, and other structured products. Now, if you take a look at the sectors represented under this index, they are financial services sector, oil, gas and consumable fuels, metals and mining, power, construction materials, chemicals and telecommunication. So the highest weightage is given to the financial services sector by a weightage of 31.25%, while the telecommunication sector is given to the least weightage by a weightage of 1.18%. Now, if you take a look at the top 10 holdings of the company, they are Oil and Natural Gas Corporation Limited, Grasim Industries Limited, NTPC Limited, Bharat Petroleum Corporation Limited, Power Finance Corporation Limited, Indian Oil Corporation Limited, Power Grid Corporation of India Limited, Coal India Limited, Vedanta Limited and Hindalco Industries Limited. So the top first position is given to the Oil and Natural Gas Corporation Limited by a weightage of 5.72%, while the Hindalco Industries Limited is given the top 10 position by a weightage of 4.65%. Now if you take a look at the index returns as on August 30, 2024, you can see from the data provided here, especially the tabular column and the graph, that in 1 year it has produced a return of 90.46%. In 5 years, it has produced a return of 36.54%. And since inception, it has given a return of 17.85%. As you can see from the graph that it begins relatively flat but starts climbing significantly after 2020. So this steep rise suggests that the value of this fund has surged in recent years, which can indicate strong growth, especially post 2020, which may reflect a response to economic recovery or favorable market conditions, which, as you can see, that it has consistently performed well in the long run compared to a short-term period where there is a lot of dips. So it seems to be more oriented towards long-term performance. Now, as we have a basic understanding of this fund, now let's move on to analyzing whether this will be suitable to our investment portfolio or not by analyzing the pros and cons of investing in this fund. So let's start with the positives. There are 4 major advantages of investing in this fund. So the number 1 advantage is the focus on value stocks. So the key strength of this fund is that invest in value stocks. So because these are stocks that are typically undervalued by the market, giving you an opportunity to buy at a discount and potentially benefit from long-term gains as their value appreciates. Second advantage is a diversified portfolio. So the fund picks the top 30 value stocks from the Nifty 200 index, offering a well-rounded exposure around different sectors. So the diversification here helps in spreading risk while still focusing on high potential value stocks. Another potential advantage is a low-cost passive strategy, which, since this is an index fund, it follows a passive investment strategy with lower expense ratio compared to actively managed fund. So this makes it a cost efficient way to tap into value stocks without high management fees. And another key advantage is the potential for long term outperformance. So historically, value stocks have the potential to outperform growth stocks in the long term, especially during economic recoveries when undervalued stocks may catch up or exceed their true value. So these are some of the key advantages of investing in this fund. Now let us take a look at the key disadvantages or potential drawbacks. So as you can see, one of the potential drawback of this fund is the value stocks here can be slow to grow because they tend to have slower growth compared to other growth stocks in the market. So it may take time for the market to realize their true value. So if you're looking for quick gains as a short-term investor, this fund might not be the best option for you. And another potential drawback is a market-dependent performance. So like all passive funds, this fund also tracks an index and lacks active management. So if the value segment of the market underperforms, there is no flexibility to adjust or move into other sectors. And another potential drawback is that this fund is limited to 30 stocks. So although the fund is diversified within the value stocks, it is limited to just 30 companies. This narrower selection increases the concentration risk as the performance of a few stocks can significantly impact the overall returns in your investment portfolio. And another key potential drawback is it may underperform during bull market. So in bull market, growth stocks often outperform value stocks, which could lead this fund to deliver lower returns compared to growth focused or more broadly diversified fund during especially these types of periods. So these are some of the key disadvantages as well as the potential risk you might be undertaking while choosing to invest in this fund. So make sure to carefully assess this before choosing to invest in it. So what is the final verdict from our analysis? Is investing in the ICICI Prudential Nifty 200 Value 30 Index Fund worth it or not? As you can see from our analysis, this seems to be an excellent choice for investors who believe in value investing and have the patience to wait for long-term gains. However, it has slower growth and dependence on market cycle, which might not appeal to everyone, especially those seeking quicker returns. Like if you're a short-term investor, this might probably not be that much suitable for you or suitable for you to achieve your short-term financial goals. But before investing in this fund or in any fund especially, you need to consider all factors like your risk tolerance and your time horizon you want to achieve the goals, and what is the asset allocation you want to give to your investment portfolio, and see if all these factors align with your investment portfolio and then decide to invest in it. So it's completely up to you as an investor to choose whether investing in this will be suitable to you or not, because you need to understand whether it will align with your unique financial situation, right? But our personal opinion is that this might be suitable for an ultra conservative investor who's not willing to invest in actively managed funds, because compared to actively managed funds, this have a little bit of less risk. But even then, we suggest you to invest in similar index funds like this, which has a lower expense ratio as well as a lower tracking error compared to this fund. So it's better if you invest in a similar index fund where it's lower expense ratio and lower tracking error, right? And also, if you are someone as an investor who is an aggressive investor and you want your investments to outperform the market and you want dynamic fund allocation in your investment, then actively managed funds will be much better suitable option for you, because they have the potential to deliver higher returns than this fund. Because as an index fund, it will only try to replicate the index, whether it be good or bad. You cannot change the fund allocation, and it will not beat the index returns as well. It will only try to closely match the index. So it's better if you choose to invest in actively managed fund, if you're an aggressive investor especially, and you want your investments to outperform the market, which is not possible in an index fund like this. And finally, if you need professional guidance on choosing whether investing in a fund will be suitable to you or not, then you can always consult with a certified financial planner who look at the suitability of the investment objective, risk profile, overlap ratio, and the allocation to see whether it will align with your in financial goals and your investment portfolio, and create a investment strategy especially for you to achieve your financial goals faster and smarter. So this will simplify your whole investment journey and make it hassle free for you. So you can definitely consider consulting with a professional like a certified financial planner and investing through them.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.